Hey there, traders! Welcome back to another episode of the ATFX Non-Farm Payrolls Preview. I'm your virtual analyst, and here to give the inside scoop on the February NFP report. Before we start, make sure you hit the subscribe and notification buttons to stay updated with all the latest trading insights. The February non-farm payrolls will be released on March 8th at 9:30 p.m. in the GMT 8 time zone. Now let's gear up and get ready for this exciting event. Looking back at last month's report, we saw some impressive numbers that exceeded market expectations. Non-farm payroll employment saw a rise of 353,000, while the unemployment rate remained steady at 3.7% for the third consecutive month. Additionally, there was noteworthy wage growth in the US, with average hourly earnings increasing by 0.6%. Based on the January NFP, it's clear that the US economy is showing resilience. However, the timing of interest rate cuts by the Federal Reserve remains uncertain. According to George Mateo, Chief Investment Officer of Key Private Bank, strong job and wage gains may delay the rate cuts in 2024. Following the release of last month's data, the US dollar index surged to a 7-week high, resulting in a bearish market for gold. On the flip side, 3 major stock indexes experienced a substantial rise, while the crude oil experienced a post-month decline. For the February NFP, the market expects 190,000 jobs to be created, down sharply from 353,000 last month. However, the unemployment rate is likely to remain at 3.7%, and the average hourly wage rate is expected to be 0.2% monthly and 4.4% annually, a slight decrease from the previous month. Investors should consider the recently released ADP employment change data results to reflect expected price changes on the non-farm payrolls. The price reaction will be relatively stable if the gap between NFP and ADP employment change data is close. Under normal circumstances, after the release of NFP and the unemployment rate, the market pays more attention to inflation indicators, average hourly earnings calculated monthly and annually. If the data falls sharply, the market expects the Federal Reserve to cut interest rates in May or June, harming the US dollar and boosting non-US currencies, gold prices, and the 3 major US stock indexes. On the contrary, if average hourly earnings are raised significantly, the market will expect that interest rates will remain high for a period, which will be bullish for the US dollar and suppress non-US currencies, gold prices, and the 3 major US stock indexes. The following are the recommendations for the relatively volatile trading products. The dollar index in the daily chart currently trades between 103 and 104. If the non-farm payrolls report exceeds the market expectations, the dollar index could increase and reach the 105 level. On the other hand, if the data falls significantly short of expectations, the dollar may decrease and fall below the 103 level. For spot gold, if we consider it trading above $2,100, it would be a good reference point. If the NFP results exceed the market expectations, then the dollar index may surge, and that may cause the spot gold price to fall below $2,100. On the other hand, if the data falls sharply, the spot gold may surge and reach levels of $2,146 or $2,166. The GBPUSD is now hovering around 1.26. If the NFP data surprises the market positively, the dollar index will likely surge, causing the British pound dollar to fall to 1.25. Conversely, if the data falls short of expectations, the British pound dollar may surge to 1.27. It is worth noting that the resistance levels are currently at 1.2785 or 1.2828. Let's look into crude oil. The current trading price of US oil futures is between $77 and $78, considered a reliable benchmark. If the non-farm payroll results exceed market expectations, the dollar may become more robust, potentially dropping oil prices to $76. Conversely, if the data falls below expectations, the oil price may surge and reach $82. For Dow Jones futures, it is trading around the 39,000 level, widely regarded as a reliable benchmark ahead of the release of the NFP data. If the NFP results exceed market expectations, the Dow futures are expected to drop to 38,000. On the other hand, If the data falls short of expectations, it may surge to either 39,433 or 39,835 amid the Fed rate cut hope. For the NRS 100, it is currently trading at around 18,000. If the NFP results exceed the market's expectations, the NASDAQ is expected to drop to below 18,000. However, if the data falls below expectations, it may surge to 18,406 or an even higher level earlier than expected due to a Fed rate cut. The above recommendations are for your reference. Thank you for watching the NFP video. Remember to like this video and follow ATFX for more market updates.